Hello, everyone. Welcome to our next event of Driving Business in Africa. This event is called the Untapped Multi-Billion-Dollar Opportunity for Banks in Africa. I'm super excited to be here and especially to hear our speakers talk about this incredible opportunity. I remember I'd say it was about, just under 2 years ago, where I was introduced to Meghan, who's our first speaker, present her in a minute, and just hearing about the work that OZÉ specifically is working on, but also understanding the ecosystem and the potential here, which is why we wrote, as a headline, the multi-billion-dollar opportunity, because nonetheless, that is the actual opportunity. Those are the numbers, and Meghan, of course, will discuss about that further. So without further ado, first, I'll just, for those of you here for the first time, my name is Shai Bernstein. I'm head of biz development at Empower Africa. And Empower Africa is a business community with a mission to drive investment, trade, and job creation in Africa. Our first speaker, who is a friend and one of the most, I personally think, Meghan, that your personal story is inspiring for me personally, and I'm sure I'm not the only one. But Meghan McCormick is co-founder and CEO at OZÉ. I'll let you, Meghan, present yourself, and maybe you want to share a little bit about how you got to OZÉ. But I think it's fascinating, and you're doing incredible work. So I just want to salute you and commend you for that. Meghan is going to give a presentation now, and after that, we're going to have Kingsley from EcoBank giving his presentation. If anybody has any questions, you can look on the right side of the screen. You'll see that there's a Q&A tab, so you can press the Q&A tab and ask any questions. Okay, Meghan, all you have to do is turn on your mic and camera.
Hi, good afternoon.
There we go. How's it going, Meghan?
Great. Thank you. Thank you so much for having me.
Of course.
I am going to share my screen for the presentation. So that's just why I'm staring at the screen right now.
No worries. No worries. I'm gonna shut my camera off so you have the whole screen. Okay.
Okay.
There you go. Stage is yours.
Wonderful. And I'm assuming everybody can see this. So stop me if not, but otherwise I'll go ahead. So
You're good.
I'm very excited to be here speaking with the Empower Africa Network about digitizing small business loans with OZÉ. We all understand that small businesses, or micro and small and medium enterprises, are the lifeblood of the economy in Africa and across emerging markets around the world, right? Most people work in a small business. Maybe it's their sole proprietor, a business they own, or they're working in a family small business, or they're employed by a small business. Most of the GDP is generated by small businesses. The average person in Ghana, where I live, is buying their goods and services from small businesses every single day. And yet these small businesses are hampered by growth for several reasons. We have macroeconomic factors that prevent them from growing, but we also have microeconomic factors, or blocking behaviors, that prevent a small business owner from turning an income-generating activity into an empire. So today I'll talk a little bit about OZÉ and how we make a small business ready to take a loan, and then how we work with banks to match these businesses with financial capital. So anyone who's familiar with the Old Testament might already recognize what this picture is, but this is David versus Goliath. In this biblical story, Goliath is a giant. He has the right tools. He has the right armor. David trying to beat him, it seems like an incredible long shot. But obviously with his innovation of the slingshot, he's able to take down a beast many, many times his size. And I bring this picture because I think oftentimes we talk about banks, traditional banks and fintechs, as a David versus Goliath battle. The fintechs being the David, and the banks being the Goliaths that we're going to take down with new technologies, new business models, new approaches. But I like to think of it more as a question of David and Goliath. So if banks and fintechs aren't focused on fighting a bloody war against each other, what can they do? What are the benefits that financial institutions can bring to fintechs and what do fintechs actually bring to financial institutions. I think, some people get into finance and fintech for all different reasons. I think, Kingsley from EchoBank and myself and many others who get into the inclusive banking space or inclusive fintech space do it because we really believe in the transformational power that access to finance can have for small businesses. And when your ultimate goal is aligned, when your mission is aligned, even if your approaches are different, that's no reason to try to tear somebody down, but actually a solid foundation on which you can build a partnership. And through partnerships with major financial institutions, we're trying to capture the multi-billion-dollar opportunity that is lending to micro, small, and medium enterprises. So according to the World Bank, there's a $331 billion lending gap for formal MSMEs across sub-Saharan Africa. I'm not sure why they've decided to always put Northern Africa separate and up with the Middle East. But if you look at Africa as a continent, then obviously that gap gets bigger. And when you bring in informal sector, that gap could almost double. When we look at specifically the markets that we operate in, Ghana, there's a $4.8 billion credit gap. And in Nigeria, it's a nearly $200 billion credit gap. When you look at the types of APRs that banks charge to small business customers, that's nearly $80 billion of interest income that banks are leaving on the table each and every year. Now, if there are Americans or Europeans in the audience, you might find this 24% APR as usurious, too much, like unfair. But for many of these micro and small businesses, getting a loan from a bank like EchoBank, let's say, at 24% APR, it's such a step up from the micro loans they're getting from microcredit facilities that can start at 60% APR and go way above that once you include the interest rate, the fees, and the other charges that come with that loan. And I am an advocate for the small business owner, and I want to close this gap because I know how transformational that can be for the economy if small businesses have access to the capital that they need. But from a business perspective, being able to serve today's micro and small businesses will bring you to serve tomorrow's medium businesses and corporations. Because when you put the right fuel on the fire, these micro and small businesses can grow up to be medium businesses and corporations. We have OZÉ customers who started coming to us with very immature, very young businesses. We have one who will do $1 million of turnover this year. So she was able, over the course of 2.5 years, 3 years of using OZÉ, go from a micro business to a medium enterprise. And when you provide the first capital into a small business, they're your customer for life, right? If you talk to any banker trying to serve the corporate space in West Africa, they'll complain that the corporates have all the pricing power because relative to banks, there are few corporates given the number of banks that we have. And so there is really a business bottom line imperative for today for banks to serve MSMEs, but also long into the future. But of course, bankers don't like to leave billions of dollars on the table. So if it was easy, they would have done it. There are several factors that make it incredibly difficult to lend to these businesses. The first is that their records, if they have them, tend to be kept in notebooks. So you can see a picture of a notebook on the side here. This is an actual business that I was trying to assess for investment. It was a massive notebook. He had multiple of them. It's just too costly on the side of the business owner to maintain these records, and especially on the side of the financial institution to try to understand how this business is performing. Now you layer on top of it the fact that most of our transactions in these markets happen in cash, and that cash often never hits a bank account. So cash can circulate freely in the economy, never being digitized, never going in a bank account. And then on top of that, the supply chains and distribution networks are incredibly fractured and opaque. Small businesses who do cash and paper records, maybe a receipt, are buying and selling to each other as part of their value chains. Additionally, these businesses are informal, and many entrepreneurs in this region become entrepreneurs out of necessity. They don't actually understand core business concepts, including what it means to take a loan and the responsibilities that they have from the bank. So when you combine all of these factors, it's hard and expensive to lend to these customers. And then if this customer can only take, let's say, $100 loan, $1,000 loan, and you think about all the time and effort and risk that went into assessing that loan, you can see that it's not a profitable endeavor for the banks. And so many banks have ignored this segment for years. But technology is making it not only that banks can't ignore the segment anymore, but that banks don't need to ignore the segment anymore because they're actually able to serve it. So these are screenshots from the OZÉ app. OZÉ replaces the ledger book with a record keeping and credit management tool. So the business owner records sales and expenses. They can do it in as little as 3 clicks. They can do it if they're offline. They can mark any transaction as unpaid, basically recording payables and receivables. And they can send a digital receipt or invoice to their customer. Actually, by next week, that will include a payment link, so you can get paid directly from your customers. And for those who are delaying and paying you, you can push reminders to them directly from the OZÉ app. We also understand that for a business owner to digitize their record, it's a major behavior change. It's not just that the technology needs to exist, it's that we need to help the business owner form habits on it. So the OZÉ application leverages the tactics of behavioral science through gamification, the use of specific language, the use of community and incentives to create a habit-forming platform. In addition to that, we provide on-demand business education in the form of daily business tips, monthly business seminars, and an on-demand business coach. And we show the performance of the business in a really easy to understand dashboard so that our business owners can try the tips that are being sent to them and then see what the implications are on their cash balance or their bottom line. Now, as the business owner is interacting with this OZÉ application, it generates really valuable data. This data it's 3 types of data. So we get performance data. So we know their transactions, their sales, their expense. When they sell on credit, how good are they at collecting it? When they buy on credit, how good are they at paying it back? We also have behavioral data. So are you a business owner who is reading the tips? Are you batch entering your data, or are you entering it as it comes in? And then we collect demographic and identity data from our customers that allows us to create a holistic picture of the businesses that they're running. This data actually can now be shared with financial institutions, obviously with the user's permission, as well as a loan recommendation. So now, instead of a financial institution needing to go find the customer, digitize their records, understand their performance, look for collateral, visit their shop, decide to pay them, send them a check, get blank checks back, all of these steps that make the process so manual and inefficient, they can sit from their office block in Accra and decide, okay, OZÉ is telling me this business can afford a 5,000 CD loan. Click of a button, the loan goes out the door and is shared back to the phone of the customer through their OZÉ app or through the bank's application. So how is it that OZÉ is able to have create this credit model and this end-to-end digital lending process? We use a machine learning model that was developed by a PhD economist from MIT. And this machine learning model is based on thousands of historical loans in the region, and then is trained and improved and built upon pulling in various data sources from our customers. So I've already talked about the rich data that the OZÉ app generates in itself. We can now combine that with bank data from the bank that is partnered with us to originate the loan, to other banks that the customers might bank with, or their mobile money wallet or other digital payments. So maybe they have a Flutterwave storefront and they have money coming in over Flutterwave. And then we're also able to work with partners to do digital KYCing and other credit checks. And all of this data is going into the model and spitting out not only the willingness to pay, but the ability, like how much of a loan they can actually consume. This is probably not new news to anybody on this call, because you wouldn't be here if you didn't already understand that digitizing MSME loans can be a very profitable business. For the past several years, we haven't really been able to implement this at scale in West Africa because there's not been enough digital infrastructure, not enough customers using smartphones, not enough people doing digital payments. But when you pair this new the adoption of this digital technology with new credit risk models, you're finally able to actually reach this massive market. McKinsey study found that when you can automate the end-to-end lending experience for SMEs specifically, you can actually increase the average margins of that bank by 50%. This comes from top line growth. When businesses know they can get, as we would say here, a loan with no wahala. If businesses know that they can get an easy loan just from their phone, no paperwork, not having to go into the bank, then more of these types of businesses come and open accounts at your bank. And then obviously savings on the cost side, because what used to take many people, many hours, days, and weeks to do is now done instantly by a computer. Also, when the end-to-end process is digital, you can actually automate repayments and, really importantly, automate repayment reminders based on the amount of money that's in the account. So there was a study done in Uganda with small business loans that they took people and they said, okay, this group, treatment group or control group, you get no treatment. This group, if you pay your loan back on time, we'll give you a cash bonus. And this third group, we're going to remind you to pay back your loan, but no cash bonus. And the group that had the best repayment rates were not those who were paid to repay on time, but those who actually got the reminders. And they were 9% more likely to pay on time versus those who were actually paid to pay on time. And so while it's easy to get trapped in the McKinsey studies and the MIT studies, we like to take this out and talk about our real world experience. So OZÉ has been lending in Ghana for almost 2 years, as well as in Nigeria. And our pilot has a default rate of 0%. People find it very hard to believe that we could have, 100 business owners taking loans from us, taking those loans during Ghana's stay-at-home orders, and we've never been to their shop. We didn't take any collateral, but these business owners are paying back because these are growth-oriented business owners. And really exciting is that when OZÉ data is included in the calculation, so we don't just look at, the numbers that they already have in their bank account, they're actually able to borrow more, leading to the bank to have a larger portfolio with less overhead. And when a business owner uses OZÉ, takes a loan, and keeps using OZÉ through that process, on average, they're approved for twice as much on their second loan. And yes, there is a small bump in the model because we now have more repayment history. You repaid once, you're more likely to repay twice. But more of it comes from the fact that a loan plus OZÉ has so meaningfully changed the cash flows of this business that this business can now afford to take a much larger loan. I like to use Ethical Ghana, a business, as an example. She took her first OZÉ loan to get FDA certified for her hand sanitizer products, and then was able to pay that back and take a second OZÉ loan to stock her products in supermarkets and other chain stores now that she had her FDA certification. So in conclusion, I think there's 3 reasons why I would say the OZÉ model of providing technology to small businesses and lending through banks really works. The first is that business owners don't pay loans for 3 reasons. They can't, they won't, or they forget. OZÉ's a deep understanding of the business performance avoids they can't, right? I mean, of course, you're always going to have outliers. Someone has an accident, a shop burns down, but we're able to understand how much this business owner really can afford to pay back on a monthly basis. They won't. Actually, requiring usage of the OZÉ platform screens out a lot of the bad actors. So we don't really have to deal with fraud. We have not approved any fraudulent loans to date. And the third is they forget. And OZÉ has the automated digital reminders that makes it really hard for them to forget. So the fact that we touch all 3 of these reasons leads to our really high repayment rates. The second is end-to-end digitization reduces costs. So we can make really small loans. Because we lend to businesses, we don't go down really below $100, but you could still go down below $100 and do it profitably. And you do it at a massive scale. So if any single loan defaults, it doesn't really have a big implication on the profitability of your portfolio. And the third is we are not engaged in any David and Goliath battles. We're partnering with Goliath. We're partnering with the financial institutions so that we can build upon and enhance their strengths and ultimately reach the goal that we both have, which is including expanding access to finance for micro, small, and medium enterprises across West Africa and then eventually across the continent. So thank you for the time to listen to this presentation.
Always amazing to hear just how would I say, it's not even just impactful, it's more, it's like for me, this is how I feel, right? It's like a void that almost nobody's looking at. It's like it's a huge, and it's just an amazing opportunity. And I think that there's so much opportunity here for different players to come in and to help expand this. And I really think that OZÉ, you and your team is doing, a tremendous job. How would I say, paving the way and facilitating and enabling that huge potential. So, I really wish best of luck in that, and I'm excited to see what happens. I see we have a question here from Daniel. At the same time, I'll also just let you know that Kingsley from EcoBank, who's supposed to speak, apparently has technical issues, unfortunately. He's having trouble connecting, so we'll give it a few more minutes and see if he's able to join. So Daniel Ryan is asking, discuss the types of interest rates OZÉ offers, please, and payback periods.
Mm-hmm. So we provide the technology platform and in some cases the access to customers for financial institutions to lend to business owners. And what we found is the best way for these financial institutions to dip their toes in the water of digitization is to actually digitize an existing analog product that they have for the small business. If you're deep in the world of banking regulation, getting a new product approved, so that's a new, let's say, loan type or loan duration, that oftentimes has to go to the central bank for approval. So we work with existing product papers. So it's really up to the bank to determine what is the interest rate that they want to charge and what's the payback period. We have loans from 1 month up to 12 months currently. And we have loans between 24 and 36% APR. We do try to avoid working with financial institutions that will have rates that we would not recommend our customers to take, but we understand that there are some high risk loans and maybe short-term funding opportunities. Maybe you need to pay 6%, but you can't have it for more than a month anyway.
Right.
But we try to keep it low.
Right. And so Daniel's asking, is OZÉ a bank? In other words, yeah.
So no, OZÉ is not a bank. So the bank is the lender.
No, is OZÉ, I'm sorry, he's asking, is OZÉ or a bank the lender? Who's the lender?
Yeah. So the bank is the lender. If you're familiar with what Jumo has done for consumer loans, we operate in a similar space, but what makes us different than Jumo is that for the consumer lending space, there's a lot of alternative data that's generated just by people living that allows Jumo to operate without having to generate. With OZÉ, our platform creates the data to power our model, which is, in my opinion, like what's really stopping digital SME lending from taking off.
Right. Okay, wonderful. And Daniel, it seems like you may have more questions. We're going to end now the presentation. You're welcome to reach out to Megan and meet her here on the virtual networking platform. Okay. So unfortunately, Kingsley can't connect right now. So hopefully maybe we can catch him a different time and we'll record his presentation as well. Megan, thank you so much for joining us today. Always a pleasure seeing you. And to everyone here, you now have more time to network if you'd like, and wishing you, to stay safe and healthy wherever you are, and have a good one.
Thanks so much. Thanks, everyone.
Bye-bye.